TGIF, everyone. How's everyone doing today? Brock, how are you? Kevin, Ingmar, Hossein. Everyone doing okay? Hope everyone had a good week. I'm doing okay, buddy. All my trading warrior brothers and sisters, if it wasn't a Friday, I'd be taking a shot here at gold, or why not silver? Silver's not making a new high. This is kind of unusual. We're losing some relative strength here in silver over gold. I mean, it was such a tremendous move on the gold silver ratio. Maybe we're going to get some type of head and shoulders bottom here, or possibly a 3. So I don't like to initiate new stuff on a Friday unless, maybe there's an NFP and some kind of inflection point. So I'm going to wait till next week. Oh, Bill, are you in Scottsdale? Yes, I lived in Phoenix. Great trade then, DJ. Yeah.
If Bill lives here in Phoenix, he knows how it was 117 yesterday. My pool actually felt cool yesterday when I jumped in, and I think it's probably 90 degrees.
Oh my God. If you get some jets in your pool, you have a jacuzzi too.
Yeah, right.
Right, buddy.
It's crazy. My lawn person came by yesterday, so I was cleaning out some leaves from my pool before I jumped in, and I was dying, and I jumped in the pool, and I'm like, wow, it actually feels cool, which is not normal in the summer. Anyway, I'll let you continue.
Oh, it's okay. Do you know Bill? You guys are neighbors. Bill Holman?
No.
Scottsdale? Okay.
No, but I'm in
Bill, are you a member? If you join, Blake will send you an 8x10 glossy autographed picture.
Whatever.
Maybe hand deliver. Huh?
Whatever.
All right, Blake. I'm just jiving with you anyway. So I'm glad it's Friday. My jokes are even worse on Friday. Still learning?
Bill's in Old Town. I'm up north, so not too far away though.
Bill, I know you think that I have an agenda, but if you really want to learn, if you join and you hang out in the chat room with experienced traders, I teach this. Be around people that know or are better than you or more advanced, and it's a great learning tool to be around traders, see what they're posting, see what they're thinking. I'm not saying that it's going to, make you an experienced trader overnight, but you can learn from people that have experience, even though it takes time to become experienced. Just a thought. So, oh, hi, Michael. Welcome to Face. Face is the place that people come to become an ace. So also, I wanted to show this, Blake, and I know I saw your chart of the day. It was a good call because the yen sank. But, I was going to look to buy it around 104 because of this line here. And God, it went right there. And having a reversal day. So on a Friday, I'm not going to chase it up here. But just something to pay attention to, because if we are going to put in a low in yen coming up here, that too usually correlates with yields, and yields are under the April low. Here's your 10-year. And Peter Goodburn doesn't think we're going to take out this low here. And there's universal opinion that we are. And this comes in at 35. And he had a number yesterday during the interview around 44. So if the yen is going to be good, then we're not going to not only take out this low, but we could start looking for maybe an advance in yield, which is the most contrarian thing to even think of right now in this environment. It's universally accepted. What's the phrase? Lower for longer, lower for longer. Well, all I know is it's sure taking a long time to go for the stops here. And this would be the high-end bonds. Let's see, TLT. TLT is not close to its highs before the COVID panic. It's hanging around the 78.6 level. So just something I'm looking for next week. I think that the yen looks better than a bottom pick in the dollar. I've also had this line drawn for a long time, and this is coming in next week, 91.60 or so. So that's still quite a bit lower. Maybe that's going to take the euro to 120. I think a lot of people were looking to top pick it for a correction, and we just keep blowing here. Look at all this mo, even though we're diverging. 83, 85. That's a little bit too much momentum for me. Look at the momentum here, and this is something else when it comes to gold. Okay, look at the momentum RSI here, and look at the momentum RSI here on gold. So really the last week or so of dollar weakness has only really been able to generate a marginal new high in gold. And I know it's a great day. I'm not going to sell it 19 higher. I'll probably regret it. But I also wanted to show you guys what happened to shares. I pointed it out up here. Newmont has come off quite a bit, weaker than the gold. And GDX, which is an ETF on it, has come off quite a bit too. So now we're making new highs in gold without the shares. We'll see what shares do today. They should have a decent day with gold up this much. So that's mainly what I'm thinking. Dollar down, I don't think it's over. Let's see, what surprised me? Well, of course, we had blowout earnings in NASDAQ on all the four horsemen. And, right now, the only thing stopping it from the double top is we're 78.6 back. I can't short this. There's nothing I feel like I can do. The only new thing that I did yesterday is crude. I think the breakdown is real. If you remember, crude was on its way down before stocks broke in February. So this could be leading it, this 40-50 level. Once it took it out, we had this crash and then they brought the market back. But I'm thinking between here and we shouldn't take out 41 again. And this, basically is what gave jet fuel to the observation Blake's been making for a week about Canada not making new lows. And Canada was probably one of the best fades, and the dollar's still weak, but Canada just looks like it's consolidating this first wave up. Maybe I'd be looking for a chance to buy Canada, look to finesse a spot, maybe, back against these highs, 33.80 or so, 40 lower next week. So Canada, with the dollar failing now, is way off the lows now. So there was a market message down here, not making new lows, not making new lows. It had a minor dollar bounce, but it wasn't the dollar. It was this, a breakdown in crude. And, this almost achieved the measured move at 38.5. But, I know people that think that we could fall quite a bit. Look at what it held. So under 38.50 in crude, there's a lot of space. It could challenge this low, 35. This was really the breakout here at 28. So I think this is important action in the crude, and I think it's topped, regardless of what risk is doing in equities. So any questions? I'm going to leave it to the team to talk about cable. Okay. Okay, Blake. So,
Hey.
yeah.
All right.
All
Well,
right. You're gonna sleep until I don't know 4:30, 5 o'clock tomorrow. No
yeah.
webinars at 2 in the morning that you have to get up for on Saturday.
Yeah, well, yeah, I guess. Yeah, you know, it's like by Sunday I'm sleeping until 5:15, so that's good.
Oh,
Uh,
you lazy
yeah.
guy. Anyway,
So,
so did you have a good week?
yesterday took away some of my profits, so it's been kind of an up and down week where uh
It's not
last week.
easy in here, is it?
No, I'm a little frustrated, but last night I had a really good trade. For if you were in the chat room, in the ForexAnalytix chat room, you guys, everybody knew I was selling the euro at 119 last night. So, and I, before the end of the day, I'm like, look, if we make it to 119, I'm selling it. My view was the channel, which is not drawn correctly now, looks like that. And I figured we were going to run up to 119. So I had orders staggered actually at 119, 119.30, and then I was looking just to fade this move up here. And if you guys don't know why, it's because the DSIs are so extreme. Relative strength has been diverging, and very overbought on a daily basis. So I was just looking for a quick fade with smaller positions, which I took a trade at 119.03 last night in Asia. I was in the chat room and I'm like, all right, I squeezed off a little bit. And then I covered it this morning at 118.30, excuse me. So already got out of that right down here, which is, again, I'm not usually that good at cherry picking. I'll just tell you guys that much. But I knew we were getting a little overdone. I figured in Asia, that's what we're going to do. Now, the next issue, and actually, let me, since I'm here, let me pull up might as well do it, right, Dale?
Bias chart.
Yeah, might as well get it done while we're sitting here talking about the
You're
stuff.
going to
So,
have people addicted to it, and then
well,
if you stop,
that's good.
they'll
That's
go
good.
through withdrawals.
Hey, you know what? It happens. So
And they'll have to
119.
join.
119 is resistance. Hey, myself, I do this. Paul Franco does this on the European
Yeah.
crossover on a lot of FX and then some other, assets too. So I think it's a great process to go through, when you're, it's something
Yeah.
I've done for years and
See,
years and years, 15 years, 20 years.
David Hooper remembers
And
Wise Trade.
people remember all the, morning edge webinars that I do it every day, every single day for like over a decade. So for everybody, and so I know it's a common practice. All right. So here's the euro, and this is just the last move up of this. This is the channel that we're kind of monitoring, if you will. If you take the last hourly move up, the support is going to be right at channel support, which comes in at 117.98. So basically 118. So the fact of the matter is, if we make it to 118, that's going to be a good level to be on the long side, even if it's just intraday and you're looking for a 40 pip bounce. Just do like that right at the 618 channel support. The question is, do we even get down there? Remember, the dollar's been under such pressure, and I'm going to take you over to the cable here in a second. It's been under such pressure that it's having a hard time letting off on against certain pairs, like the cable. Now the cable is at the 161. Now check this out. We're at the 161% extension of the June highs to lows. I mean, that's freaking crazy. We're up here, and I mean, a lot of this move is the euro sterling, the euro pound. If you look at the euro, euro sterling's getting demolished. Which we talked about all week, right, Dale? I mean, we're like, oh, look, false breakout. It's going to lead to a breakdown, which we're still doing. So the question with this, the pound is, how high can we go? You see this resistance here. Now, hold on. Let me take this line. This line was significant back then. I'm going to delete it now just to get it out of the way. But you see the 161% extensions right here, then 131, what's the high here? The high here is 132. So I'm going to write down 2 resistance levels for the cable, 131.65, 132. And we are bullish. Now, question is, you know, if we come down, where could we quite possibly go if we start to pull back a little bit? You know, and it's hard to gauge here. I have to look at something that may resemble a channel and see. You could probably actually do a pitchfork here. So this is probably fairly decent support at 131, and then below that is going to be like 130. 20 maybe. So I'm going to write down for now 131, and that's minor support. Just know that, okay? But the cable does look like we're going to make our way towards the, towards that resistance up at 131.60 to 132. It really does. All right, let's take a look at the Aussie. So the Aussie was above 72 cents last night. We got a little bit of a stop run to the 127% extension. You see that? This is the range. Remember the range here. There's the 127% extension of the range. So we actually hit that 127% extension. So that means 72.25 is now key resistance. 72.25. Key resistance. And remember, I'm bullish, but I'm not like mega bullish on the Aussie. I mean, it's performing, but it's more or less performing because the dollar is not performing, right? I think that's more the issue right now with hold on one second. That's more the issue right now with the Aussie is just, it's going up because everything else is going up. But now you can see how we slump right back through the breakout point, which is, that in itself is a little nerve-wracking. If I was long, I'd be like, sorry guys, end of the week for me. End of the week of getting up at 3 in the morning. I start to yawn. So we can see some minor support down here at 71.55. You guys know that I can't be bearish to Aussie while we're above 70.70. All right, that's it. But we will have some minor support. I'm just going to write it down at 71.25. I mean, that's just that we could really revisit that today. Now, let's also keep in mind this is end of month, right? So we've got end of month flows coming through the market, and what I've seen from Citigroup, I've seen from Barclays is end of month dollar selling thus far, and I didn't check Goldman yet, and I can still go through but what I'm trying to say is here at the end of the month, because of the outperformance of equities, we're probably going to see some dollar selling. So because of dollar selling, like rebalancing wise, it should keep the euro and the cable and Aussie and Kiwi pretty well supported, with dollar buying. You just have to be, careful on being short, or let me say that another way, long dollars as a result. All right, so the Kiwi, this is very similar to what Coach was showing as far as the trend line here for the dollar yen, which we'll look at here in a second. Here's the Kiwi, little upward, resistance. So this is very frustrating if you're long, because, and it's even more frustrating if you're short, because I was short in Kiwi yen yesterday, and that one zapped a lot of my profits from this week. I was just so irritated at that. And you can see the Kiwi looked like it was breaking out. It was after post earnings, and I'm like, I didn't want to stay short the New Zealand yen just in case in Asia they ripped up the market. So I said, so irritated. and it reversed, So that's a little frustrating because it's not only the New Zealand dollar, it was the New Zealand yen did the exact same thing. Anyway, this will be resistance now is 67.10, 67.15 actually. Now, here's the other thing about the Kiwi. We've been in this. Let me draw this out for you. We've been in this 67 to 66 range. If we really try to build on that range, then that means that the range automatically goes to 68 cents roughly. But considering that it's like an upward sloping channel, like an ascending channel, and you can see it like the bottom end of it probably looks like that. It means we're probably gonna have some support here at 66 and a quarter before we actually get to 66 cents. So frustrating, bullish, but frustratingly bullish. All right, let's take a look at the dollar Canadian. Sorry, I was just looking at something. Yeah. Here's the dollar Canadian. Okay. So the dollar Canadian, as Dale's pointed out, really outperformance here. And it's not just the Canadian. I mean, you look at the Kiwi and you're like, wow, the Kiwi's starting to kind of underperform too. So is the Canadian dollar. And then Takis in our chat room from Greece, he was like, hey, look at the rand and the ruble, and you can take a look at the peso too, which we will here in a second. Those emerging market currencies are getting smashed, and I'm like, they actually look like the dollar's actually breaking out against some of those emerging market currencies. So that's something to keep in mind when you're dealing with these commodity currencies, that they may continue to underperform right now. I'm surprised that they are, based on what equities are doing, but at the same time, you have to respect price action, right? You kind of got to respect it, and you can't ignore it. So right now, I would say if the dollar Canadian gets a little bit of a move back down to 33.80, I think the coach said that number too. I think he whipped that number out of his butt, but there's actually a 618 down there. So that should offer support, and resistance is at 134.60 right now.
I teach that method.
The whip out your butt analysis. That's awesome.
Yeah.
That's whip it out my butt analysis.
Now you need good hand sanitation, like with COVID, right, to trade like that.
Yeah. All right, dollar max. Let's take a look at and here's the peso. So the peso is knocking its head up against, and you could actually look at it like this too if you want to. This is just right into the resistance zone, but obviously 22.25, and then this downsloping trend line is the one that really has my attention. This comes in at 22.30. What is that? 22.37. Okay, so I'm gonna write down a couple numbers with the dollar max. 22.25. Really key is 22.37. That's really key. And everybody, if you're a normal listener here, I'm really focused on this trend line if it breaks, because the dollar has performed well against these emerging market currencies, and if they break, they're going to squeeze. And that's usually, in my opinion, it's happening for a reason. Meaning, if they start to squeeze like that, it's probably some sort of risk off that we're seeing in the market. But obviously, you look today, it's like, okay, after the earnings that you saw last night, we're not going to get any risk off going into today and tomorrow, or Monday, more than likely. But we have to be cognizant of these emerging market currencies really starting to show some weakness here. Let's take a look at the Swissy. So the Swissy almost hit the 90-cent level. We are creating a little bit of a hammer, not only in the Swissy, the dollar yen is too, something we got to pay attention to. I think we got to be a little respectful of what we're seeing here, you know, in some of these currencies. Oh, you know what? There's something else that I should show you guys. Bear with me. There we go. Okay. Just so you guys can see, the euro, where are we at right now? 118.40. So we have 854 million dollar or 854 million euro expiration on 118, and then 118.50 at 516. So I wouldn't be surprised if the euro continues to drift down towards 118 going into the options expiration at 10 a.m. Eastern. Then you got dollar yen, you know, some big expirations around the 105 level, which, you know, we'll probably end up drifting up towards 105 in the dollar yen. And then also the dollar Canadian, which this is the one thing I don't want to get too carried away with the dollar Canadian, is you got 2.2 billion at 134. So we might end up continuing to drift a little lower with the dollar Canadian. Anyway, so with the Swissy, let's talk about the Swissy. Like the euro, it's the exact opposite of the euro. So that means that support comes in at 90. You know, I'm just going to put 90. Resistance right now is at 91.15. Oh, shoot, I forgot to write the rest of this. Hold on. Sorry. 91.15. Resistance. 90. All right. And then, sorry, I got to go back to the peso here and find support's going to be, I think support is really key at 21.90. So. Okay. Did the Swissy, Norwegian krona, same. Although we did probe below 902. So I'm going to write down 9, and resistance is at 9. Right now, it's still 925, but this trend line, I want to be aware of it. So it's going to be 917. So 917 is resistance. We are in a bearish trend. Okay, let's take a look at the dollar yen. Hey, do we have any data coming out, Stelios?
I don't know. Stel probably knows.
We have.
Stelios even here?
I'm here. Can you hear me?
Yeah.
Where's that Stelios guy?
Hey.
Hey, do we have?
We have core PC out of the
I
US.
just
We
get
have
through?
Canadian GDP. So we have a few interesting numbers coming up.
So we do have. We have Canadian GDP coming, right?
Yes, and
Yeah, okay.
US core PC, which is the Fed's favorite inflation gauge.
So Canada is looking to lose 14.6% GDP. Okay, so we're gonna have to pay attention to that, which I'll pull up here in just a minute. Let me. I just need to move that out of the way. Let me finish up what I'm doing. We did the Norwegian krona. I think I can do the yen really quick. So Dale was talking about the yen. So we should have resistance here, 15.10. And he's right. We have like channel support really comes in at near the lows. So good call, Dale. I think it's a good look. And you made a very valid point regarding yields too, and a contrarian move. I mean, no one's expecting yields to go up. Yields are going down right now. Everybody's talking about lower yields, blah, 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 blah. So, whoops, 105.10.
Yeah, that would be one heck of a surprise for the markets.
It would be. It would be. We'll come back and finish the rest of this here after the Canadian data. So let's pull up the CAD. And remember, guys, if you have ForexAnalytix, here, I'm going to pull up this. You guys have the data flash. which I'm going to put here, which you can see how quick it is.
What
via
don't we
Bloomberg.
have on this site? It'd be a shorter list.
Oh, here comes the data. GDP came in at negative 13.8. So it came in, negative 13.8, and that's, it's all down here. Wait, did I miss that?
No. You're looking at Europe. Basically, GDP month on month for Canada came in better than expected.
Yeah, negative 13.8. It was expecting 14.6.
Yeah. Oh, sorry. Okay. Yeah. You're looking at the year.
So it did come in better. Did come in better than expected, and the dollar Canadian didn't move. I mean, it moved down just a smidgen, but it didn't really do anything. So,
anyone know why the U.S. took the biggest GDP hit in the
probably
world?
because we went lockdown. We went lockdown late, but we went lockdown the largest, and plus two,
because we're the biggest. I mean,
yeah, I mean that probably has a lot to do with it, and
because I mean Germany was down 10%, not 35. You know what I mean? So
yeah, I mean
anyway.
that's a good question, and on it, and I'm sure there's a lot of
I figured
ways
Stella
to
would
answer
know.
that, which Stelios would probably be better suited, but that is really a good question. So, but hey, Stelios, before you do that, think about that answer. Let me finish up what I'm doing here with the bias chart, since nothing's really happening there. Let's take the dollar index. So dollar index 618 retracement comes in at 93.25, which, remember, everything's very extreme with the dollar right now. So I do expect it to bounce at some point. Doesn't mean it's going to be sustainable. It's just, we're bouncing. So, 93.25 should be resistance now. 93.25. We're in a bearish trend.
We have such a smart group here. They're saying that Nicholas is saying U.S. GDP is annualized, not the others. So, I mean, we could ask any question and our attendees know the answer.
You know what? That's not true, but unless that was, because that was the advanced GDP that we were probably looking at for U.S., because our quarterly readings will be different. So that's a good point. That is a good point.
Yeah.
Was that our advanced GDP this week or preliminary? I'm trying to look at charts.
I think it was advanced GDP. Let me have a look. Hold on. I think it was advanced. Let's have a look.
So 92.54.55 is going to be support. And by the way, I want to just really quick while I was looking at the dollar index here. So the dollar index, this is if you take the March move, the 127% extension comes in right here. And if you look at the dollar right now, we're trying to create a hammer. Don't get too terribly excited about this, because we tried this a couple of days ago, and you can see what had happened after the fact. So, again, this is, I know you could go, oh, the bottom's in. Well, you could have made that argument there. You could have made that argument there, so, and I think a lot of you guys did when we were at the support, a week and a half ago, when we were, trying to find support around the 96. So just be careful with trying to, pick bottoms. And everybody that has listened to me for over a decade now knows, picking bottoms leads to the who picks bottoms gets stinky fingers. So, right? No one else is laughing. All right. I thought it was funny. All right. Okay. So let's go to gold. Gold. I mean, we're right back at highs again. 1920, 2000. I don't. There's nothing really right there. It's same stuff, right? 1920. It's bullish. I mean, $19.20, and this would be 1980, 2000. We're in a bullish trend. And then I'm just going to write this down because I can, because it's what it is. I mean, you look at yesterday's pivot off of the from the S&P. Look at yesterday's pivot of the support. I mean, I think we went to 32.18 maybe.
Went right to the line of death.
I mean, look at 32.02 and just, you know, boom, right back, you know.
Yeah, 98 was that line. So yep, held where
it's
it
a
had
dollar yen's at resistance, by the way. Just
look at that thing.
Yeah, I mean it's ripping higher. So just be a little careful with dollar yen at this resistance. I know like all these yen pairs are moving, but just be a little careful with it up here. Just because I know we're up against resistance. Matter of fact, let me see something else. That's probably an 88% retracement. 88% retracement comes in at 105.15. So, you know, we're right up there. Just, you know, be a little careful, you know, at these prices. Okay. So Stelios, good morning. How are you?
Good morning. I'm very well. TGIF, everybody.
Yeah, TGIF.
You too, bro.
You know, our friend Simon has actually got a couple of very good points regarding GDP. You know, the equation of GDP is consumption, investment, government investment, et cetera, et cetera. Consumption is a huge part in the US, right? You have to think about what makes up GDP, and you know, it's very consumer driven. So I think Simon is right on that, and you know, and also, you know, he did say on the chat room sarcastically, but there is some truth to that. The quality of jobs in the US, which have been increasing over the past few years, had not been, how should I put it? You know, highly skilled jobs have been reducing, and you know, McJobs and
the quality of jobs have been much poorer recently.
Exactly. So you shut down restaurants and you know, all this stuff that people do when they go out. And what's going to happen? You know, all these people lose their jobs, consumption goes down, and you know, it's just an effect that I think someone's right. It has a bigger, it's a bigger effect on the US than say Germany. I think that's a good point.
That's a good point.
Yeah.
So
thank you, Simon.
So what else is, and thank you, Simon, for that input. So what else are you looking at here, especially following like this dollar move, Stelios? And by the way, if you want, you can take the charts for a few minutes. I'll just go get myself some coffee.
Yes, of course.
Yeah, let me go do that. I'll be back in just a few minutes, and maybe you can share with some of these folks.
Screen.
Let's see those macro.
I'll be back in just a minute.
Charts.
Can you see my screen?
Mm-hmm.
Okay, you can see it, right? Okay, so you know, what do I think about this dollar move? Well, we've had the breakout in euro dollar, that's for sure. You know, on this weekly chart, a very long term, there's this descending trend line which has been broken. My macro view on the dollar, I've said this for months now, I think, here on the webinar and in the chat room, is that the dollar is going to weaken. Having said that, I still believe that there will be some kind of trigger for a move, for a risk of move again. Is it going to be COVID, you know, taking over again? Because you've seen cases go, you know, increase everywhere. They're increasing measures here in Greece now. We had tackled things really, really well, brought down new cases every day to low single digits, so basically nothing. And now it's starting again. So they are introducing new measures. There's going to be, I think, measures on people who travel from abroad. And I wouldn't be surprised if more and more countries do that. So I think we will see another risk of, like, how severe is it going to be? I don't know. But I think it's going to happen. And when that does, especially if it's a little bit strong, then the dollar will get bid, just like it did in March. So I think this breakout here might prove to be a false breakout. If it does, then we're probably going to see a reversal lower, maybe towards, I don't know, 112 or something like that. You know, this is just a theory. You know, obviously I don't know for sure what's going to happen, but I think if we do see a risk of move, that's going to manifest itself. And there's also other currencies. There's Euro SEK, you know, it's one we don't cover. Sorry, USD SEK. It's one we don't cover at ForexAnalytix, but it's always something to look at because it's like the canary in the coal mine, and it's broken lower. Now, if this move sticks, then obviously the dollar is going to see more and more weakness going forward until the elections. I mean, I don't know what's going to happen if we do have elections in the US. And Dale, you said this some time ago, and I thought at the time, oh, you know, Dale's crazy for saying this. And Donald Trump.
Well, you're right about that part.
Well, you know what, you were spot on, because he implied that, you know, he said he suggested maybe they should be postponed, and you start doing stuff like that, you get into very dangerous territory. So again, this is broken, but if we do get a risk-off move and that gets reversed, you know, you're going to see a dollar, you know, you're going to see a dollar spike. So I think euro dollar looks like it's broken, but I want to wait and see a little bit more price action to see if it's confirmed, and then we see. But as I said before, my macro bias is for the DXY to go quite a bit lower. But how will it get there? That's the question. I really thought that we were going to get a bounce once we hit this ascending trend line. We haven't, but again, it's the same as a Euro USD, because the DXY, 50% of it is Euro dollar. If we do get a reversal, then it's probably going to be very squeezy here. Anyway, that's what I think about the dollar. It's a very difficult question to answer. What's the dollar going to do? But you know, I do think we'll see a risk-off move. And
so I know we've covered this before, Stelios, but let me ask you again. You know, was the European Council meeting on the COVID response 2 weeks ago, was that, it was a turning point for me.
Yes.
And it seemed to be a turning point for the euro. But how, as you know, you being a European in Greece, how do you feel about this fiscal union that's being formed right now?
Well, I think the agreement was good. It was a good thing. We said that at the time, and me as a European, this is what I want to see. And, you know, I want to see the countries get together, you know, and help each other. What I still have a problem with is, and I don't know how this is going to be fixed, is the fact that we have the same currency as Germany here in Greece, and it's just something that cannot go on for, you know, decades and decades. There's a very distinct, there's a very different mentality between the two countries and the way things operate. So I think that's the fundamental flaw of the euro. But having said that, I think what is being tried here and what they're trying to do is positive, obviously positive for the euro. So in the short term, I think this is all good for the euro. In the long term, it's a big question mark. No, that's my view on that.
Okay, all right. Well, it's definitely worth talking about, because, you know, the euro, I mean, when you're talking about the dollar as a whole, you have to incorporate your thoughts on the euro,
of course,
since it makes up such a big portion of the dollar index. It's less, you know, trade weighted than like let's say the you know, Bloomberg dollar index, or, you know, something like that. So anyway, all right. Well, that's a good thought, and you know, I think it was a valid point that you pointed out, the U.S. dollar, Swedish krona, and you know, I'll take over the charts. I'll take back over the charts from here.
Okay.
Hey, Dale, you don't have a you don't have an interview today, do you?
No.
Okay. All right. Good. Then, you know, we're gonna let's go through the Q&A and see if there's any good questions coming up. And I want to take a real quick look at the U.S. dollar, Swedish krona myself, since it's been a while since I've actually looked at this chart. So I wanted to just kind of do some, you know, top down, you know, analysis with it. So, you know, let's start with the weekly chart. And I know Stelios had it on the week, and I think that's a good, you know, starting point. And I think, you know, just by looking at it, whoops, that's not the one I wanted. First and foremost, you know, we can see that we are breaking, you know, a weekly trend line, which doesn't bode well for the dollar. I mean, it doesn't, you know, especially if you copy paste this, or clone it, excuse me. You could argue that that is, channel resistance. And we've broken. So, I mean, that right there tells us that the dollar is broken, which that to me, if you're going to use this as a baseline as analysis, and you can see we obviously cleared the 618, and you could do the same thing with the dollar index here, and the dollar index looks very similar how we broke through the weekly trend line. That just means to me that bounces are going to be shallow, and we need to sell them. So for me, like, I look at the euro, it's like, okay, euro, come back down to 117, please. Because I know it's 150 pips away from where we're currently at, but if I could see some sort of dip like that, I'd want to sell into strength, because at this point, on this week, just on this weekly chart, Stelios, it does look like we've broken, right?
Yeah, absolutely.
So,
and it's something, this chart, I always look at it because I know you look at it as well, because it's a very good gauge for the dollar in general.
I do it a lot on intraday, but I haven't looked at it in a while on a weekly basis. But take a look at this. So if you go from the and this would be the 2011 lows, right, to the highs, we're actually below the 38% retracement as well. So that, that again, that just does not bode well for the dollar, and for the U.S. dollar, Swedish krona, but also, for the dollar just as a whole. And that's why, again, I have to reiterate that, when you see things like this, and you have a euro that's breaking a multi-year trend line, that just means that, let's, hopefully we get a dip to buy, and a decent one too, because that is going to be, in my opinion, the way to play the FX market moving forward, unless something dramatically changes. And the one thing that would obviously make a difference in my decision making at this point is if we saw like a 5% down day in equities for a significant reason, not some sort of profit taking, but like we're down because the United States went back into a lockdown nationwide. It's not going to happen, guys, but I'm just, I mean, it could, but the chances of it happening are pretty slim. Or, something like, President Trump gets COVID, right? And it seems like a serious case. So that could actually spook the markets quite a bit, right? That's not saying that's a realistic expectation, but it definitely could happen, especially in this environment. So when you think about those types of things, that's like the type of thing that might actually spur me to say, all right, I need to actually not be buying dollars on or selling dollars on a bounce, but I might need to start buying them on a pullback. But unless there's something dramatic like that, I think the dollar at this stage is a sell rally type of event. What do you say, Stelios?
That's I think I agree with that. My only as I said before, I think the only scenario where I would hold off and really be careful is if we do get a proper risk off move. But I agree with that.
So do you we were talking for the last couple years about the dollar, and the one point I brought out, and I constantly brought this up, and I'm going to reiterate it right now because now it's more important than ever. What is going to spark a dollar rally? You're going to see the dollar grinding around, but what really is going to spark a dollar rally is is a risk off episode. And when we went into lockdown state, the dollar index ripped, and now we're back to the grinding around, and I'm not in the camp right now that if stocks go down, the dollar is going to strengthen significantly.
No, I think it has to be a Eurocentric issue.
A Eurocentric issue,
yeah.
Or maybe some sort of there's a reason why we need to be buying dollars for safety reasons, and like I outlined a couple. But so if we just if we're down like 0.5% or 1%. One day the dollar might firm up that day, you know, bounce a little bit, but it's not going to be anything significant, and it's probably not going to be long lasting. So that's the way I'm looking at the dollar.
Yeah, and remember, excuse me, the world needs a dollar which is not too strong, because, you know, the EM denominated debt and all US denominated debt, etc. So the dollar can't be too strong for too long. But yeah, I agree. If we do get a risk-off move, it should spike. Maybe not as much as March, but I think we will see a decent move in the dollar.
So yeah, maybe a retrace, Blake, you know, maybe halfway back or something from wherever the low comes in. Still, is there some type of European vote August 8th? I interviewed a guy who was pointing towards that as being the beginning of a problem in Europe. Do you know of August any big 8th. Vote? Is it Italy or is it the European Union?
Oh, is it the Italians? You're right. The Italians have something. I have to check.
Okay.
Check, yeah.
Because this
Are they
guy
bringing back Berlusconi?
Yeah. No. Not Berlusconi. You know who they want, right?
They want, no, I don't.
Mussolini.
Actually,
Mussolini.
Mussolini.
Oh, come on.
Benito Mussolini.
So, hey, real quick, I wanted to just show you guys crude. So, you know, we've been looking at crude. $42 is a big deal. It was a big deal because that was, if you guys don't recall, this is a, hold on, let me just reset this. It's a weekly chart. This is the breakdown point. This is when we went to meltdown mode and we went to negative, right? We couldn't, on the continuous contract, we couldn't get back above 42. Plus it's a 200-day moving average, and we've slipped through it yesterday through the trend line. Then we did a quick spike down. I think crude remains bearish while we're below, let's just say roughly around 40.50 to 41. I think crude's probably going to trade back towards the mid 30s. That's one of the other things that may also be supporting a weaker Canadian dollar, weaker Norwegian krona moving forward. Sorry guys, didn't mean to yawn on you. So Dale, did we have any questions for the next 10 minutes?
There's $1 million question that I can't answer. It was, I think, from Antonia. Where was it? Here it is, Antonia Hunter. Are you able to share your thoughts on the NASDAQ? So here's the question. Was it a double top and pullback, or are we on a continuation pattern higher?
My opinion is there's no reason to be bearish. And remember, double tops build stops. So,
I love that one.
Yeah, double tops.
That's a great one. I've never heard that.
A double top builds stops. That means everybody's putting their stops right here, right? So what happens when we go through the resistance? It just triggers all your stops and you get stopped out. So I don't get too terribly excited about double tops or triple tops or resistance unless it's broken. But double tops, more importantly, I don't get excited about it until we start breaking through the support. So this is a really prime example. If this is a double top, right? If that's a double top, or you can call it a triple top if we top out today, then if it breaks through this support eventually, if we break through this support, dang it, stop. We break through the support here at 10,300, okay? That means the move should take us down to 9,600. So this is where the money is made, is right through here. You can try to trade this range if you want and maybe get short up the highs and put in a quick stop, but on a double top, the money is really made down here.
Or you could look for one of your favorite things, Blake, next week, like a false breakout over the double top.
Yeah, that's another.
That might happen.
Yeah, that's another, like, you get right above the highs, trip the stops, and also you also have to keep in mind, there were some really good earnings yesterday, really good. Oh my
God,
they're really good tech earnings, and so the problem
people
with that
were having orgasms. There were live orgasms.
But it was the 4 companies that probably had to gain the most from the lockdown.
Of
Yeah.
course, of course, and I mean Amazon. I mean Amazon was so perfectly positioned for this virus. They're it's probably not the Wuhan virus; it's the Amazon virus. They probably set it loose. I'm just kidding. Completely joking there. But what I'm saying is they were perfectly positioned for the virus. I mean there was no better company out there. So.
They had to hire like 150,000 people, didn't they? To
Something
cope
like
with the
that.
demand.
Some crazy stuff. So, with that being said, the fact of the matter is that Nasdaq's bullish, and you're going to have people over the weekend talking about Nasdaq. We're probably going to this 161% extension at 11,700 before we go down. In my opinion. That's not saying that it's going to happen. I'm just saying that if I had to, guess, I guess we're going higher than first before lower. So again, I'm not excited about any type of downside at this point. So.
And one other, if you have a comment, if you guys know about it, in fact, a guy that I interviewed a few times, David Jensen, sent me an article from Bloomberg that there's a lot of delivery notices that people want to take. They're long and they want delivery in gold. And that there might be a huge short squeeze if everyone takes delivery on the gold. They can't play the paper games. There's probably not enough gold to meet all the demand of contracts that people want delivery on.
That's the issue with futures. They trade in many multiples of what's actually out there.
Right.
So, what happens with futures? Usually they get to expiry, you roll them over. That's what they do. But if somebody wants to take delivery, then the guy who's short has to come up with the actual physical gold to deliver. And that's going to be a nightmare.
So that's what's going on. My only jaded part is, why is this article coming out here after this huge run instead of before? Anyway, that's just my skeptical nature.
I'm gonna tell you. I'll tell you this much, guys. I bought. If you guys were listening in a couple years ago, I bought all my physical.
Yeah.
Down here, it was actually
your address again.
It was down here around the 15 is when this bull flag was developing, right around here.
That was a great purchase.
Well, I mean, it just just kind of been sitting in it, just sits in the safe, and I bought a lot of silver at the same time, which would have been right here around the 16. So if silver gets up to the 618, which is $35, and gold goes to the 161% extension around 2,400, I'll be on the offer. So if that's
what Goodburn said yesterday. That's his ultimate target in gold is around 25 something.
Yeah, I mean, look, you get this panic buying, and people can't fulfill. You're gonna get people like me coming out of the woodwork that says, "Hey, I've been acquiring this stuff, and I'm going to dish it out." I mean, because that's you sell into the panic, and buy into the panic too. So buy into the other types of panic.
Yeah.
So
when people line up for something, sell it to them.
Yeah, especially if you've been in it for a while. So
hey, DJ's already having another mimosa break, so that must be time to wrap it up. What do you think?
It is. It's almost time to wrap it up. So hey, guys, first of all, I want to explain something to you. Forest Park FX, they are our partners in our sponsors for this
crime. Partners in crime, yeah.
Partners in crime, right? But you'll also notice if you go over to our reimbursement program, or it's now called the Forex Sponsor Program, because we've formed a relationship with Pepperstone Securities. So if you're outside of the U.S. and you're not in the U.S. or Canada, sorry, if you're outside of the U.S. or Canada, we formed an exclusive relationship with Pepperstone Securities. So I'm actually bringing on Chris Weston this weekend onto the week ahead video, and we're going to talk a little bit about Pepperstone. And they've just got such a big global reach, and they're a great brokerage firm that we've been working with a lot recently, and so we've kind of gone an exclusive with them, and you can get ForexAnalytix for free as a result. So for a period of time. So take a look at that, and if you have any questions, please email us. And remember, Forest Park FX is also available for U.S. and Canadian residents that are not in the that don't fit the Pepperstone realm. So check them out, guys, and I appreciate that. I appreciate you guys doing that, and I appreciate you guys supporting us and listening in every day. Stelios, thanks for being here, Coach. I'm gonna let you wrap it up, man.
Don't just count your pips, count your blessings, and also people aren't mind readers, so tell people that you love them. That's your homework assignment over the weekend.
Love you, Coach. Love you, Blake.
Love you, Stel, Blake.
You guys are so sappy.
Come on, try it once, and make a breakthrough. You Marine, yeah, there you go. All right, I know you said it to your buddies in the Marines, so you could, we're a platoon too, Blake.
That's right.
All right,
we're about the size of a squad, but hey.
What do I know? I had a good lottery number. So anyway. Everyone have a good weekend. Really, this is a great day to join because you have all weekend to navigate and get comfortable with it. And really, I know why Blake, besides for, to provide content, does his week ahead video, because I guarantee you that a lot of his ideas in that video end up being his best ideas for the week. So your best trades are the ones that you plan when the markets are quiet. That way you're executing and not FOMOing and impulse trading. You're ready, you have a plan, do your work. And with that being said, also stay safe, and we'll see everyone Monday, and we'll kick some butt again next week.
And Dulce asked, "Where's Blake's videos?" I tweet them. Then our ForexAnalytix account tweets them, and then it's on our YouTube page on our website. So if you go to the YouTube page, and if you sign up for the newsletter, you get it first. You'll get it emailed to you. So and
so
by
look
the way,
at the week ahead.
Yeah, and also I have to say that Steve will be back next week. So if you guys have been missing Steve, you'll get him back. So he's coming off vacation. All right.
Can we get him to extend it?
No.
Okay. I love the guy. All right, guys. So everyone have a great weekend, and we'll see everyone next week. Adios.